Are you a busy professional looking to diversify your portfolio? Ever wanted to passively invest in real estate but don't know where to start? John Fortes provides you with a guide to passively invest in real estate. This is the Passive Investor Show.
And now, the Passive Investor Show. Here's your host, John Fortes.
Hello, PI listeners. Thank you for lending me your time today. Welcome to the Passive Investor Show. I'm John Fortes. Our goal is to provide you, the busy professional, with passive investing tips and tricks for your real estate investments to leverage more time for you to focus on your true passions. Let's get to work. In today's episode, we want to focus on the inflation hedge through apartment investing. We'll break down the definition of inflation, and I'll provide you an example, and then we'll talk about how that affects the apartment investing, and if you decide to invest in apartments, why it benefits you as a passive investor. By definition, an inflation rate is the quantitative measure of the rate at which the average price level of a basket of selected goods and services in an economy increases over a period of time. The example of that is, take something that costs 50 cents. At an annual inflation rate of 15%, $1 will eventually be worth 50 cents after 5 years. This indicates a decrease in the purchasing power of basically the nation's currency. So how that affects the stock market is the stock market inflation rate over the last 10 years is roughly 1.6%. The Federal Reserve target is 2% annually. And you can find that on the Federal Reserve website to basically confirm that. It's out there. They even state that. What does that mean? So if they're targeting 2%, 2% aims to devalue your savings and reduce your purchasing power every year. If you invest in the stock market and make an average of 8% a year, that really means you're getting 6% because your dollar's becoming worthless every year. Well, losing value, not worthless. How does that affect, how does that tie into apartment investing? Well, when we buy for cash flow, not appreciation, there are other reasons such as long-term debt, but let's focus on the cash flow. We're buying for cash flow. When inflation goes up, the cost of housing rents goes up. As an apartment investor, that is a good thing, right? So because the revenue stream is increasing, if you're getting long-term fixed debt, your biggest expense is held in check. So let's marry that, right? So inflation goes up, rent goes up, you're paying your mortgage statement, your biggest expense back to the lender, and that's already at a fixed rate. You're increasing NOI. Inflation allows us to increase rent while our debt decreases in value. So that's how it affects it. So let's just summarize that. Inflation devalues the value of your stock returns. Apartment investing is a great hedge against inflation. Revenue increases when inflation increases. The reason why I wanted to focus on this topic is because I deal with a lot of passive investors who have a huge concentration in the stock market. And this is one of the examples I provide them when we're talking about passive investing through real estate. A lot of them already know they want to invest in passive investments through real estate because they're already passively investing through the market. But they want to diversify their portfolio. And the inflation conversation really helps them guide them or make the decision easier to invest through multifamily syndications, apartment investing, however you want to call it. And that was the reason why when I create these show topics, I create them because of their conversations I'm having with passive investors who are maybe hesitant or maybe just want to learn a few more things before investing in opportunities. And it just helps them make the decision easier, and it gets them comfortable with me, and it gets them comfortable to be able to provide their capital to put it to work, because that is the end goal. At the end of the day, it's making our capital sweat for us so we don't have to sweat for our capital. PI listeners, I'm grateful for your time and I appreciate you for listening. If any of this resonates with you, please subscribe and leave a review. The more you know, the more we grow. Thank you for tuning in. Till next time.